Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic evening so far. I'm looking forward to trading with you guys today. Looking forward to this particular class, and then obviously COT report to follow afterwards. So we'll go as long as we need to with this class. So I've put together a little presentation. Um, and uh, and I'm sure we'll talk about other things as well. But throughout the webinar, feel free to ask any questions that you have. I'm sure you'll have plenty of questions, so feel free to ask those as they come, and then I'll get to them as soon as I can. But yeah, I just want to welcome everybody here. We've had a lot of new signups recently, and so I just want to welcome you guys who are new, and hopefully you find a good home here with Trading with Steve. And I'm excited to work with you. We're all excited to work with you. We have a fun camaraderie here. Great people. Every person here is a great person, and I'm excited to help all of you guys with your trading and your goals that way. So let's go ahead and jump into this. Before we jump into the webinar, I need to share a disclaimer. So as always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money, because you definitely can lose money. So make sure that you go through that process each and every time that you take a trade. Okay, and also just as a reminder, I mean, I've not a reminder, I guess maybe it's an announcement, but this is our first webinar doing prop firms and how to grow a small account. And I plan on doing this once a month, and it's going to be every fourth Wednesday just before the COT report webinar. So if you want to mark that on your calendar, it's already on the calendar on the site, which I think, by the way, you can copy the calendar that I have onto your own personal calendar, like you can merge the two. Tell me if you can't, but I'm pretty sure there's a way to do that, just because it's a Google Calendar. Anyway, so that's going to be once a month. All right, guys, I'm excited. Let's jump into this. So first, I want to talk about prop firms, and I want to specifically talk about like the different prop firms and what they are. And then we'll just kind of go from there. I guess we'll talk about the rules of prop firms, the pros and cons of prop firms, and then we'll kind of segue into how to grow your own account. And I'm going to give you some strategies of growing your own account. So first of all, prop firms in general, you can read the definition there, but in general, what they do is they provide successful traders with capital, live capital to trade in the markets. So you can basically sign up with one of these companies and audition. Some places do auditions. They have what's called a one phase or a two phase challenge, which is most common, is the two phase challenge. Some places, in fact, I'd say most places now offer some kind of instant funding, which is really exciting because most of these prop firms give traders very large amounts of capital to trade. We're talking about high six figure amounts of capital, right? The standard, I would say, is becoming the $100,000 or $200,000 account. That's kind of the new standard. I mean, there's places that have, and it's also becoming more and more common to get accounts that are 300,000, 500,000, even $1 million. And some prop firms have what's called scaling up plans, which are another thing too. There's so many things we could dive into today. So today I'm hoping is more of like an introductory webinar to prop firms, and then as we go along, what I hope to do in the future webinars is maybe have like a day where we highlight a very specific prop firm. And then if you have a prop firm you want me to dive into, I'll learn everything about it, and we'll talk about like the pros and the cons behind that prop firm and what strategies would be best and what type of trader would be best for that type of prop firm. But in general, it's important to know that prop firms will give you tons of money to trade. Now, this is actually a little bit of a newer phenomenon. Like I worked for a company prior to starting my own business. I don't really mention what that company, their name in my platform, but some of you may know what it is. But I worked for a company where I They were one of the first prop firms out there. They started in 2011, which doesn't sound like too long ago. That's what, 12 or 13 years ago. And this company, they would give traders funding when upon that they could prove that they're a good trader. They'd have to go through their little combine and they'd have to fulfill certain metrics and rules, and then they'd ultimately get funded. The big problem though is that these funded accounts were really small. Like you'd be looking at your first funded account is only $1,000 or 2,000, maybe like $2,500 at best is your first funded account. And every 3 months you could increase that to 5,000, maybe 10,000, and maybe if the risk manager thought you were doing well, you could increase to maybe like a 20K account. But I didn't see, when I was working there at this particular company, I never saw a lot of people get over, well, most people never got over the $5,000 threshold. Most people were either $1,000 or $2,500 account. And I never really saw people get into a six-figure account. That was just off limits totally. I never really saw that. So, but now that barrier's been broken with companies like FTMO, My Forex Fund, Surge Trader, I've got Top Tier Trader on here represented, Funded Next, and Funded Trading Plus. And there is a plethora of other funding platforms out there that are excellent. In fact, I think personally that there's about a new funding platform coming out nearly every week or multiple times a week. So there's a lot of other ones. These are some of the mainstream platforms. The oldest one on this list that you're looking at right here is FTMO. And they've been around since 2016. And that is not a long time ago. You're thinking, we're 2023 right now. And so what is that, 7 years ago? That's not a long time. So this is a little bit of a newer phenomenon. And it's awesome though, because it's creating a platform of competition and giving traders options. And the more and more these platforms have to be competitive with each other, that's going to make it even better for you and me. So hopefully we should wish as traders that more and more companies come out. Whether or not you go with that company or not, we just want more competition, because the more competition we can create, the better the platform, the better the prop trading firm we can go with. But like I said, FTMO has been the standard. A lot of the other ones you're looking at here are just a year or two old. In fact, My Forex Funds is the 2020 company. And their one, I would say My Forex Funds is probably like the unofficial number 2 funded platform out there, My Forex Funds. And I love My Forex Funds. I have accounts with them and I think they're great. And there's a lot of other ones here that you're looking at, and they all have their pros and cons. Now, one thing I want to, before we move on to the next slide, I really want to make something very clear about prop firms. So it is exciting. You can get funded. Now, I just want to make sure that everyone understands that these companies make absolute bank. These guys make a lot of money, because here's the thing. When you guys try out to be a funded trader with any one of these companies, there's a fee, right? The fee for the opportunity is quite expensive. I know, for example, like with the Surge Trader 500K challenge, it's a one-phase challenge, which, by the way, one-phase challenges tend to be more expensive anyway, and we'll talk about the pros and cons of that. The one-phase challenge with Surge Trader for 500K is almost $4,000, right? And it's not even an instant funding platform either. It's just, well, they have instant funding at Surge Trader, but almost $4,000 to get a 500K account. That's a lot of change, guys, because if you happen to fail that challenge, you could potentially lose a lot of money, right? And I've myself have failed challenges, and I've had clients fail challenges, and it's not a fun experience. Now, I've passed challenges. Many of you have passed challenges, and it is exhilarating. It's exciting to pass a challenge because it represents freedom. It represents freedom for you, your family, and just an optimistic future. So I do want to make that clear that these guys, how they make their money is essentially, not all of them, but a lot of them, I would say 90% of them actually make money when you fail the challenge. So that is very discouraging, and it may be something to consider whether or not you want to actually go with a prop firm. Okay. because when you're new to trading and you're kind of loose and you're getting excited and things like that, and you haven't really nailed down a strategy, you don't have your risks set up correctly, these guys are more than happy to take your credit card and have you fail on their platform, because then they'll just keep your audition fee. Okay. And you cannot get that money back if you fail. Like, that's the whole point of the opportunity, is here's an opportunity. You're going to pay for this opportunity in advance. And if that opportunity doesn't pan out, then it just doesn't pan out and they're going to keep that money. So that is the sad reality of prop firms that I have to share in this webinar on a recording right now, that is the reality of prop firms. Now, can you be very successful with these guys? Yes. And actually, one of the cool things about prop firms, I think, is a lot of these prop firms have toned down a lot of their rules recently because of this competition, right? There's more and more prop firms coming out. So there's more and more competition, making it a place where it's easier to pass. Like, the rules are becoming less. Most places, in fact, we're going to talk about that in just a moment, have just 2, 3, maybe 4 rules that are really, really important. And then the rest doesn't really matter as much. And if you just focus on those 3 or 4 rules, then you can definitely pass these challenges. So let's move on to the rules next. So most prop firms, like I said, have a 1-phase or a 2-phase challenge, and they have their pros and cons. Basically, a 1-phase challenge is, it is what it is. So you sign up and pay an audition fee, you start trading their account, which, by the way, I don't know if I made this clear for those that are new. When you're auditioning, you're basically trading a simulated account. These are fake accounts that you're trading, but you're trading them in the live market. It's the same thing as if you were to open up a demo account with Owanda or Forex.com or whoever it is. So they're giving you the audition account, which is fake money in the real market. And then your job is to trade it successfully, money manage that fake money well. And then if you can do it and meet their metrics, you are now a funded trader with these places. Okay. So a 1-phase challenge is where you're given this audition account, this simulated account. You're going to go out and basically complete their rules. Most 1-phase challenges have a longer time limit, but one of the problems that I've noticed, and it's important to have this when you look at these, one of the problems with 1-phase challenges is you have a tighter drawdown. So they'll give you all this ample time to pass the challenge. In some cases, it's unlimited time to pass the challenge, but you're going to have, a 6%, 5% max drawdown. So if your strategy requires several losing trades before you get some big winners, a lot of times those 1-phase challenges are not a great fit, right? So anyway, that's just something to be aware of. 2-phase challenges are simple. Typically a 2-phase challenge is a platform, a prop firm that will give you the audition account, where you have 30 days is the standard and then actually a lot of places are now doing 45 days. So you have 30 to 45 days to pass your challenge. In fact, FTMO, their standard is 30 days. But if you email them 3 days before, you have to email them 72 days before the challenge is over. If you request an additional 15 days, they'll give it to you as long as you haven't broken any rules. The only thing that sucks about adding the extra 15 days is if you happen to fail the challenge, even though you were profitable, they're going to keep your audition fee. So you don't get a free repeat if you do that. So you have to kind of know, like, am I close to passing the challenge? If you think you're close, then you want to do that. Anyway, that's a whole nother subject, but we could really dive into a lot of very specific rules. So in a nutshell, a 2-phase challenge is where you have to make anywhere between, most places, the standard is 8 to 10% in 30 days. So you have to turn your account. Like, if you do $100,000 account, you have to turn your $100,000 account into $8,000 to $10,000, and you have 30 days to do it. Okay. And if you don't, some places you'll either fail. Most places now, as long as you haven't broken any specific rules, and you ended profitable, they'll give you a retry. Some places will give you unlimited retries. For example, My Forex Funds will give you unlimited retries as long as you end in the 30 days in profit and you haven't broken any rules. So that's kind of nice of having that security net of knowing, okay, at least I can retry if you don't quite hit that. Right. Okay, so usually you have to make a 8 to 10% return is the standard. Now, most places on a one phase or two phase challenge, especially the two phase challenges, require a 10% drawdown or less. I've even seen some places like My Forex Funds, they allow up to a 12% max drawdown. This means that, as you guys know, not every trade's going to win. You're going to have losing trades, right? And you may even have losing trades from the start of the audition. So the moment you start, you're just not trading great, you can have drawdowns. So with My Forex Funds, it's up to 12%. So if you start a $100,000 account, you could potentially lose up to $12,000 of your baseline before you would get in trouble. Okay. If it's with FTMO, it's 10%. So you could lose up to $10,000 on a 100K account on a 100K challenge. Okay. Hopefully your strategy puts you in profit right away and you're not having to deal with that. Now, there's another really, really important thing to look at with prop firms, and that's the max daily drawdown. Now, this honestly, in my opinion, is probably the biggest thing to look at when you're looking at a prop firm, the daily drawdown. I'm telling you, you want to look at two things. One, you want to find out what the max daily drawdown is in terms of a percentage. And two, you want to find out if it's a relative drawdown or if it's a fixed drawdown. There's a big difference, and I'm going to explain what those are. So a max daily drawdown is basically where, let's say you take some trades today, like let's say the COT report strategy, you take a bunch of trades, and let's say it's a bad week from the get-go with the COT report, and we are just losing trades immediately. Okay. If you're risking more than 1% per trade, maybe 2%, we'll say, and all those trades just stop out pretty quickly, that really runs the risk of failing the challenge. You probably would fail the challenge, especially if you were at 2% per trade. Probably even 1% per trade if every single one of them hit the stop loss. So even though you didn't hit the max drawdown at 10%, let's say you're only down 6% on the day, which you still have up to 10% to lose. The problem is if you lose more than 5% in a day, you're hosed. Like the whole thing's over. They're going to keep your money, and you've lost your money at that point, and your account will be suspended. It's a real deal. It's something to really consider. Right. And so when I'm working with a lot of you guys, some of the things that we talk about is, okay, we need to find out what your max daily drawdown is, because usually that's the most important thing I like to look at, because let's say, the max daily drawdown is, there's some places that do 3%, as low as 3%. I would, by the way, if I saw a company do a max daily drawdown of 3%, I would never touch them. Not in a million years I would touch them. I'd rather trade my own money. I'd rather take the audition fee and trade that on my own and just forfeit that entire prop firm. So also, there's a lot of places that do a 4% daily drawdown. It's pretty common as well. 5% is more common, but 4% is out there. I don't even like those because, oh, this is the other thing. This is a statistic I wanted to share. The number one, if you had to guess, I already told you, but if you had to guess, what's the number one thing that causes people to fail prop firm challenges? It's this third bullet point right here. So it's the daily drawdown. This wrecks more prop firm auditions than any other rule out there. And they know this. And it is and generally, I know it's out there, like, if you fail, they make money, right? Like a lot of them will make money if you fail. So, that's okay. But what I guess what I'm trying to say is, basically, you can lose 5%, or excuse me, it's important to basically be aware of how much your daily drawdown is, because this is where most people fail. And so I'm just admonishing you guys to really be aware of this. And so when you're trading something like the COT report, ask yourself, okay, if every single one of these trades went down the chute right now, is that going to cause me to fail the challenge, or could I come back the next week, right? It's just such an important thing to be aware of. So what I would do is, if you're taking 6 trades, maybe only risks 0.75%. That way you're still within that threshold. Maybe you only risk 0.5% per trade so that you're safe there. But the other challenge you run into is, if you don't risk enough money, then you won't hit your profit target, right? So there's this really fine balance, and it really is a fine balance between how much you're trying to make versus how much you're risking on each trade. So you have to kind of weigh those two things, right? I have some strategies I'm going to share towards the well, it's a few slides away, but I'm going to give you guys some strategies on how you can hack this and pass challenges quickly, because there's a way to pass. It depends on what your mindset is. If you're trying to pass challenges slowly, like if you like those unlimited time challenges, then I have a prescription for that. Okay. With some of the strategies we're trading. If you like the prop firms that'll fund you quickly, and they've got more, loose rules, but the time limit's a little tighter, that's the give and take. So there's like a cost benefit analysis, right? So you have prop firms that will give you unlimited time to pass, but their rules are usually tight on the other side, right? So they have these smaller max daily drawdowns. Total drawdown is less. And so that's the downside to those. And it's very luring to a lot of people, because these unlimited time challenges give you obviously unlimited time, but the downside is you don't have the loose rules to work with. So I want to make sure that that's clear. That's the give and take. So if you work with a challenge that has like a time limit, you have 30 days to get this done. One of the problems, or one of the good things that comes from that, is you're going to have, like, if you have 30 days to do it, you're going to get better rules on the other side of that. Like, you'll have a bigger drawdown. You'll have, like you can risk more money, which is nice. Your max daily drawdown, max total drawdown, it is much better there. Dave says, is the metric enforced at the end of the trading day, or if you exceed the threshold at any time during the day? So that's a great question. Every company has a different time where they reset. So I know with FTMO, it's at well, it was always at 4 p.m. my time. That's 6 p.m. Eastern. So at 6 p.m. Eastern, FTMO and my Forex fund flips. So so basically that's when the new 5% starts. So let me give you an example. Let's say you have a bad trading day, you lose maybe 3 or 4% on the day, and you realize that loss. The next day you get a fresh 5%. As long as your total drawdown's in a good spot, you get another 5% to risk the next day, and you can get right back at it. Okay. Now, if you carry your losses from the previous day, let's say you stopped out on one trade, it lost 1%, but you have another 2 trades and they're down collectively 3%. Well, if you carry those into the next day, well, then you can only afford to lose up to 2% of your account, because you're carrying those losses. So you really want to be careful about carrying a lot of losses, because you can get yourself into trouble doing that. Let's see, what's the other thing I wanted to say about that? Okay, one last thing too on this. There's the difference between relative drawdown and absolute drawdown. So when you have this max 5% daily drawdown, some places have what's called a relative and absolute. Absolute's easy. Let's start with that one. And I love absolute drawdown. So basically, let's say you start the day with $100,000, 5% of your account would be $5,000. So you could lose, let's say, well, let's actually put it this way. Let's say during the day, let's say you got up to $8,000 of profit. It was a good day, but you didn't realize those profits. And the market by the end of the day came all the way back to your baseline of 100,000. Well, technically at one point during the day, you were up 8%, and now you're now you're down to just break even and you still have these trades open. So one of the issues that you run into is with relative drawdowns, you can get yourself into trouble because if at one point during the day you were up 8% and you pull back more than 5%, that's a breach of the rules. So that's the difference between relative and absolute. So with an absolute, like one of the cool things about FTMO is like if I have a good day with FTMO and I see another good trading opportunity, I might go a little harder on that next trading opportunity because I'm playing with house money and I can afford to lose. Like on the days where I have like a 5% gain, I technically with FTMO, because it's an absolute drawdown, I have up to 10% I can lose without getting myself into trouble. But with my Forex funds, that progresses up. And so if the system realizes that at one point during the day you were up $8,000 and now you're back down to break even though you're at break even, you still breach the rules. So very important distinction to make when you're looking at the different prop firms. My Forex funds does a relative drawdown. I still like them. I still like my Forex funds even so, because I'm willing to work with that, but it's something I want you to be aware of. FTMO doesn't do that, just so you know. So, and also it seems like a lot of places are adopting the relative drawdown. So just buyer beware, right? Like when you look at those. Chris says, but it doesn't matter when the drawdown violation happens. That is correct. Yes. Yep. That's right. Okay. And then, yeah, like I said, a lot of these places require a minimum of 5 trading days or 10 trading days. It just depends. You have to make at least a 10% return or less in phase 1. Phase 2, a lot of places give you more time and, you know, the profit target's not as big, but it's just a verification phase that a lot of people have implemented. Okay. So we've already kind of touched on this, so I probably won't spend a lot of time on this slide, but basically there's, again, lots of pros and cons. So a little bit about me and my prop firm experience. The first 2 challenges I ever attempted. So technically I got funded with this other company I used to work for, and I got a lot of payouts from that company trading basically the COT report exclusively. And that was awesome. Then I decided to try out for some of these companies, not using the COT report, different strategies. First couple of times I actually failed, and I did the big challenges. Like I did the 100K, the 200K challenges twice in a row. And the first 2 times I attempted the challenge, I failed. So I lost over $2,000 in audition fees. And it's very emotional because you think about it, you fail a challenge, like you were kind of planning on that money making money, and now it's a sunk cost, literal sunk cost. It does not do anything for you, right? And so I just want to make sure that that's clear, that the risk is real with these prop firms. And I'm not even saying I would recommend this to every trader. Not every trader needs to do this or has to do this. I'm just showing you your options. Okay. I do like a lot of them, not all of them. I think they're very useful and they can get you access to the capital that you need to be very successful. But keep in mind, there's other risks too. Like any prop firm at any moment reserves the right, all of them do this. They reserve the right to take away your account for any reason at any time. They reserve that right. That's in the fine print. And every single one of them has that in the fine print, whether you realize it or not. And not, it's bad business to take away your account if you didn't break any rules. So I don't think they're going to do that very often, if at all. But just know that they could go out of business. They could file for bankruptcy, especially because these are very new companies. So just something to be aware of, which, by the way, it is important to look at some of the mainstream companies, in my opinion, because these guys have really good track records of paying out their traders. Another thing that I would recommend if you're shopping for a prop firm challenge, find companies that um, will fund you with real money. So some companies like FTMO, for example, and MyForex funds, the two biggest ones, when you're funded, the money is actually still fake. That may be a shocker to some of you, but I do want to make sure that you know that. So with FTMO, let's say you pass the challenge and you get a $200,000 account in their, it's not even in their fine print. It's like right on their website. They declare that when you're funded, it is a fake account. Like it's still simulated money. Um, so even when you're funded, some of these companies like FTMO and MyForex funds, if you make money and actually get to the point where you get a payout, okay, if you get a payout with FTMO, they're paying that out of their own pocket. I just want to make sure that you knew that. That didn't come, I mean, the platform still kept track of your profits. They still keep track of what you did. What you did is real. Like you still made that. You managed the risk. You made those profits. They're yours. But they are going to write you a check that didn't come from trading profits. Like they're going to write you a check from other people who have failed prop firm challenges, and that's how they're going to pay you. So I want you to know that. And so you might want to consider looking for prop firms that actually do fund you with real money. For example, Funded Trading Plus right here, they'll actually pay you, like not pay, well, they do pay you, right? But when you're funded, they are real accounts. This is actual live money. It's not a demo account. It is real. And so they have an incentive to only have people audition who are going to be great traders. They want you to be a good trader. Yes, they would like to collect your audition fee if you fail, but what's also cool is if you pass, you have an opportunity to make money for them still and for yourself. So it's kind of like a win-win-win. I like prop firms like that because you're actually trading with real money, even like once you get funded. So I think that's just something to consider, because again, some of these places don't really have an incentive for you to actually pass the challenge. They just want to look pretty and give you a good place to fail in a subtle way, I guess, right? So just something to think about. Okay. Now I want to share a strategy which is called prop farming. Some of you I've shared this with before, but does anybody know what prop farming is? I don't think I'm the first person to come up with this. I heard it from somebody else and they taught me this, but prop farming is uh, it's a technique. Yeah, it's a technique to basically hack funding challenges. Now, please listen to me carefully. I would not recommend this for everybody. You have to decide if this is best for you and if you have the stomach to do this and if it matches your trading style and if it's something that you're willing to do. So basically, prop farming, what it is let me put up a scenario here. So let's say you have $1,000 and you're willing to budget $1,000 towards a prop firm challenge. Instead of doing just a single challenge that would cost $1,000 and it would give you a $200,000 account if you passed, what you do is you separate that into like a third or a fourth. So let's say you separate into fourths and you do $250, $250, $250. And basically a prop firm challenge at $250 would cost $250, and that would get you an account. Typically that's around $50,000. Okay. Maybe $300. It just depends on the prop firm. Like a $300 challenge would get you about 50K if you passed. Basically, the idea is if you're trading like the COT report or whatever you're trading strategy, the idea is to, if it's a great week trading, risk pretty hard, maybe risk 1%, maybe risk a 1.5%, maybe up to 2% per trade. And basically, if it's a good week with the COT report, or if it's a good week with whatever strategy, you're going to pass that challenge the very first week you embark on that challenge. Okay. Because even though you're risking 2% per trade, yes, that is kind of a higher risk, but if the market goes in your favor pretty much quickly and at the start of the week and it just everything goes right, yeah, you're going to pass the challenge just right away and you'll get funded. Whether that's a one-phase challenge, you'll get funded right away. If it's a two-phase challenge, you'll pass phase one, which is usually the hardest anyway, just the first week, and then you're on to phase two quickly. So you're basically just increasing the lot size, increasing your trade, your risk per trade, with the idea that you could easily fail. You could easily fail the challenge. But if you fail the challenge, basically the idea is since you allocated up to $1,000 to pass a challenge, then you just come back the next week and start another challenge, same thing with a fresh set of COT report trades, and you pass the challenge with like another you do another $250, you put that in there. And if that's the winning week, let's say last week didn't go very well, but this week's great, and you've passed the challenge on the second week, great. It cost you $250, and then you got your because most of these places will refund your fee. So if you spent $500, you'll get 250 back, and then you're funded. And then from there, once you're funded, you tone down that risk to something more normal. Like you'll do 0.5% per trade, or 0.75% per trade per risk, risking maybe 1%, whatever you're comfortable with, something that would perpetually keep your account. And now you're funded. So these are ways, like if you're looking to get funded like ASAP, these are ways you can hack it. But just keep in mind that you're going to fail challenges if you do this. So I got to make sure that's on the record. If you embark on a prop farming conquest, you will fail challenges. But it's the reward though, is that you're going to pass some challenges and you're going to pass them very, very quickly. And then what that does is it helps you collect more prop firm accounts, and you can connect those to a copy trader or something like that. And then that funded account that you got quickly can then go ahead and start generating cash flow. And then you can get a paycheck from that, which, by the way, my recommendation is, I've said this to a lot of you. Once you get your first prop firm paycheck, what I recommend is that you split half of it and spend it on yourself. Like literally go buy yourself the best dinner, take your spouse, literally like your favorite place. Just spend it on yourself. If you're at the mall and that's where your favorite place is, then definitely go into the nicest store and buy the thing that you've always been wanting to buy. Like you got to treat yourself, because if you treat yourself like that, like it's going to elevate your mood. You're going to be rewarded to trade better and to be consistent. So when you have a bad day, you're like, well, I got to do the thing that got me to the mall last time and helped me buy the thing I wanted. I was able to take my spouse out on a really awesome date, and like multiple times, because I got a great paycheck from this. So that's going to lead you to trade even better and follow the rules and keep with your system, right? Okay. So that's and then take the other 50%. Well, obviously save some for taxes, right? But take the other 50% of what you allocate, and then go buy some more challenges and do another prop farming conquest, right? Like where you go out and find your favorite prop firm or whatever prop firm you want to go with. Split up that money into thirds or fourths so that you give yourself, 3 or 4 chances to pass. Because one of the problems that I see with people is they have like they just want the 200K account, like right now. They just want it right now. And so they'll put $1,000 in, and then like you fail a challenge and you're putting all your chips in, like that's all you budgeted for a challenge. I'm guilty of the same thing. You put all your chips into this challenge, and the problem is, like, since that was everything you had, it's really hard to come back from that, and you're going to regret trading. You're going to be like, I didn't want to trade. I don't want to trade anymore. Right. So what I like is, if you can, 50K is not a small amount of money, guys. Like I know that in the prop firm industry, that may not be like the biggest account. That's still guys, 50K is 50K. right? 25K is 25K. Let's not laugh at that. That is a chunk of money. You're going to get the 200K account someday. And maybe it comes from 4 different accounts that are from 4 different prop firm companies, which is nice, by the way, because if you have 4 different companies and one goes belly up, well, okay, you lost one place that was making you money, but you still have all these other prop firms, right? So I think it's a good idea to collect, quote unquote, smaller accounts, like a, like a, like a 50K, 25K account, even a 100K account, I think is starting to become a smaller account now. And eventually maybe you have enough money to start doing 100K accounts, right? Definitely do something like that. So that's what prop farming is. It's where you're taking a little bit more, like a larger risk, like a risk you wouldn't normally take and wouldn't recommend for yourself or for me, if you were trading normally. But it's with the idea that you're going to get funded quickly, and in a very controlled way, where you're not biting your nails like, oh my gosh, I better pass this week. Oh my gosh, like I only have a week left. How many of you have been through that on a challenge? I have. Like, oh my gosh, I have a week left. I've only hit half of my profit target, or I'm even in a drawdown and there's only a week left. This is not good, right? That they know this and they're preying on that fact. So if you can kind of eliminate some of that stuff by saying, okay, I'm going to do some smaller challenges. I know that, either the COT report or that's what I've done it with, like do COT report, or you can do like I've done an SSI strategy as well, that prop farming that worked as well. You can do, or technical analysis. If you got a system that works really well that you feel like you could make that happen, then you do that. You're not necessarily betting on just a single trade. Like even with the COT report, you're saying, hey, I got my top 6 trades this week. Like for example, last week with the big profits we had, you would have passed a prop firm challenge in 1 week if you had done prop farming last week. It was a really, really good week, only 1 loser. Everything else was in the profit right away. Plus you're using a trailing stop. So that's going to eliminate even more risk. Right. So that's basically what you do with prop farming. Anyway, do you guys have questions about that? How that works? This is a great way to just get funded pretty fast. And maybe you hit a losing streak with like the COT report or something like that. Maybe you have like 2 or 3 weeks where you lose. Well, that's why you split it into fourths. You split the budget into fourths. So like, okay, maybe you get to your 4th week. Hopefully you don't get to your 4th week and haven't passed yet, right? But it could happen, right? And you could even lose 4 weeks in a row. I'm not trying to say that you would. I think statistically the chances of you not passing at least once in 4 weeks is not as likely, but you could definitely, I want to make it clear on the radio here that you could get there and still not pass. I'm just trying to give you another solution that's worked really well for me and a lot of other professionals who hack the prop firm challenge space. They do this. I just want to make sure that that's clear, that this is kind of a hack. It's kind of nice, actually. All right. Okay, so the other thing I want to talk about is growing your own account. So we're switching from prop firms, and I'm not going to spend a ton of time on this because I really just have a few thoughts that I want to share. And if you guys have other thoughts, go ahead and share that. So I want to share a quick little story, and it's nothing huge, but it's very powerful. So several years ago, my wife and we were in college. It was 2018. I guess it wasn't that long ago, but it was still several years ago. I didn't have a lot of money, like at all. Like I was just going to school. My wife was going to school. We had a little apartment that didn't cost a lot of money, and we just had like cars that were college cars, right? And we didn't have a lot of stuff. Okay. And I followed Dave Ramsey, and I just kind of realized I needed to start investing money. I was like, I thought about it and I thought, well, I really don't have a lot to invest. I just don't have anything. And my attitude towards that was don't even try, because I don't have a lot. Like, don't even try. And then there was this part of me that's like, but that's the attitude that keeps people poor all the time. And said, so, okay, well, I don't have a lot, so I better start with something. So me and my wife talked about it and we're like, yeah, we don't have a lot of money, but I'm like, okay, what can we do? So we decided to invest $20 a week. We had I don't know if you guys are familiar with Acorns. It's a cool app where you can invest in like long-term stocks like S&P 500, full stock market index funds, international funds, and they just allocate it for you. You just set it up on a reoccurring amount, whatever you decide that's going to be, and every week it'll just withdraw whatever you want it to withdraw. And so we just said, you know what, let's just every Friday take $20 out automatically from our checking account from the little that we had, and let's just start doing it. And yeah, in a month I had what, barely $100, right? Or just under $100. And then, I was working some extra. I got a second job while I was going to school, and I started getting a little bit more money. And my wife and I were actually able to juice that up to about $60 a week, which was really exciting for us as college kids. So we're like, let's just juice that up, get it to $60 a week. And all of a sudden, I started to see this momentum. Like as a college kid, I started to see like, wow, I have an investment account where it's even made some gains too, not a lot, like, it's made some gains in the stock market here, and some dividends that it made. And, here I am 6 months later, and this account has, over $1,000 or $2,000 in it, which to me as a college kid, that's like, wow, $2,000, that's amazing, right? Just from doing 20 to $60 a week, right? Um, and and then we got more excited and we're like, you know what? I think we can cut out like another meal or something like that. I think we could probably not go out to eat like one more time. Let's bump this up to $100, right? And we did that for years. We've always done that, by the way. And so years later, this thing is worth tens of thousands of dollars. And it's all from what we started in 2018, right? You got to get that kind of momentum. And so that's how you grow. This is one strategy I have for growing a trading account. So what I do is if I have a small account, because I've done this many, many times, like if you only have like, say, $500 or $1,000 to trade, you still have to use a lot size calculator. You especially have to use a lot size calculator because you got to figure out how much risk that's going to be per trade. What I do is I set thresholds. So for example, let's say I have $1,000. I'll say I'll calculate my lot size based off of $1,000 until I get my account to say $2,000. Once I get it to 2,000, then I'll base my lot size every week off of a $2,000 account. So let's say you have a bad week and that $2,000 account goes down to like 1,900. I still base my risk as if it's a $2,000 account. I don't jump around and say, oh, well, it's a $1,900 account this week, so I'll base my risk off of that. I do it off of thresholds. So the more you threshold up in that account that you're growing, then at that next threshold, that's what you're basing your risk at until you level up to the next one. And I usually just do it on like 1,000. Once you start to get tens of thousands of dollars in an account, then you'll probably just risk it based off of like every $5,000 or $10,000 in those increments. That's how you kind of build it from there. But the thing that you have to do, guys, you're not going to, I know this might be hard for some people, but you're not going to turn $1,000 into $1 million. I'm just going to say that it's not going to happen unless, and you have to do one of these two things. I mean, obviously you can do a prop firm challenge, but if you're just going to trade your own money, you have to do these two things. One, you have to trade it so you can get those dividends every week from growing the account. Okay. And those are going to be small in the beginning. Like for example, last week I made a 7% return. So if you had a $1,000 account, you would have just made, $70, which is not a lot, but that's a good start. Then what you need to do is start doing what me and my wife did. You need to start contributing a fixed amount every week, whatever you can afford, or a biweekly if you're paid biweekly, and you have to decide how much that's going to be. Can you put in $20 a week, right? Can it be $100? Do you have enough to do 200? Whatever that is, but you need to start contributing. And I would say either weekly or monthly. It's easier if you do it weekly, then it doesn't seem as much. If you do it monthly, it seems like a big amount and you're like, I don't have enough for that. So if you're just putting in a little bit every week automatically into your trading account, on top of trading it, That's how you go from 1,000 to 2,000 very, very quickly. Okay, because your own contributions plus the trading profits get you to that. You double your account really, really fast. Okay, and then from there you have 2,000. Maybe you get a raise or something, and you level up a little bit more. Maybe you make a sacrifice in your life, whatever that is. Then you go to 2,000, and then you just level up that $2,000 account to 3,000 even faster, then to 4,000 even faster. And then you can see how that momentum starts to build. But when you have a small account, there has to be, like Chris says right there, compounding. But on top of the compounding, there has to be a regular contribution. That's how you turn a small account into a very large amount. But you can't toil a small account like $1,000 or $500 and toil it to 10,000 if quickly. Like, it's not going to happen quickly, guys. It could take years to take $500 to a 10,000. So you can start with 500 if that's all you have. Absolutely, totally recommended, right? But then you have to put in those regular contributions, and if that means sacrificing something in your life, then that means you have to do that. But you're not going to trade your way from 500 to 10,000. Now, it's a lot easier, in my opinion, to, let's say, once you get your account to like $20,000 through contributions and compounding, you get it to 20,000. It's way easier to compound an account. Let's say you stop contributing, like you don't contribute anymore. Way easier to turn a $20,000 account into 40 or 30 than it is to turn $500 into $3,000. So much easier. Okay. So you need that little extra momentum in the beginning, and it's got to be weekly, where you're putting in some money every week. And even if it's just $5, like, do what you can. Find a way to put whatever you think you can afford, right? So that's how I've grown small accounts with my own money. Now, the other benefit to growing, and I was just going to talk about this, like the pros and cons. When you're growing a small account, you have autonomy now. They're not going to take away your account if you lose more than 5% in a day. You should be mad at yourself for losing more than 5% in a day, but you can. So if you feel like I can risk, 2% per trade, which is a lot of risk to take, in my opinion, but you can do that on your own account, like when you're small. And you can take call report trades with 2% risk instead, and use the trailing stop. You would never do that on a prop firm account unless you're prop farming, but that's the only reason you'd ever do that. Then you're just growing that. So there are some advantages to trading your own money, because if you have that autonomy, like Owanda, forex.com, they're not going to stop you if you decide to risk 2 or 3% per trade. But you still have to ask yourself, okay, how many losses can I handle? Is this going to be okay? Like, all of that stuff you still have to calculate. Okay. All right, guys. I think that is let's put your questions in, and then I'm going to wrap up. Chris says, good plan will help build some discipline while pushing out to make necessary. Exactly. Plus, if you're sacrificing your own money, you're going to trade better. You are. Lee says, do you use only US regulated brokers for this? Yeah. I mean, I've always just had my personal money with Owanda, and sometimes with forex.com. But Owanda has been great for me. And then obviously prop firms, most of the prop firms I'm with aren't even in the United States, but I would never deposit money with those guys. Roger loves Owanda. Yeah, me too. It's great. I love their web trader, makes it easy. And their trailing stop is perfect, right? We've had that fiasco with MT4, but yeah, it's interesting. So, all right, guys, appreciate it. I got to wrap up and take a break, and then I'll see you guys in about 5 or 10 minutes for the COT report. Thanks for coming, and we'll see you in just a few minutes. Thanks. Bye.